Welcome. In this video, ZBCN broke the downtrend. What will happen now? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the chart is carefully examined, we can see that the long-standing downtrend structure has finally come to an end, and the price has managed to break above this significant trend line. Such a breakout typically holds great importance in technical analysis, as this movement does not only signal a short-term price increase, but can also indicate a larger-scale change in direction. Especially after periods where the market has been under sustained downward pressure, breakouts like this often produce strong signals that investor confidence is being restored and positive momentum is beginning to take hold. Following this breakout, a natural part of the technical structure is expected to occur: the retest. A retest, where the price returns to the broken trend line to test that area again, plays a key role in the entry strategy of many investors. These types of turning points are crucial, both for reaffirming buying confidence and for confirming the new direction of the price. If the price pulls back after the breakout and touches the former resistance, now turned support level, and buyers step in again from this zone, it becomes a very positive sign for the healthy continuation of the uptrend. Retests following trendline breakouts are widely accepted among technical analysts as a sign that the upward move may be stronger and more sustainable. While sudden price surges may sometimes be limited to reactionary buying, a pullback after the breakout followed by strong support at that level confirms that the move is not just a speculative jump, but a true change in direction. At this point, if the price approaches the downtrend line again and tests it, the key element to watch is the strength of the buying reaction from that level. If a strong upward response is seen, supported by volume, it clearly shows that the price has potential to move to higher levels. This retest zone also represents a strategic opportunity area where investors gain a second chance to enter the market. After a trend line is broken, price typically moves up somewhat, then pulls back to the broken trend line. This return move provides an ideal entry point for investors who may have missed the train. More cautious investors, in particular, prefer to wait for the retest to be completed, rather than entering immediately after the breakout. This allows the market to mature and more stable price action to develop. Another important point to consider here is that the broken trend line now begins to act as support. In other words, the line that previously pushed the price downward and brought in sellers with every touch now becomes a defensive line for buyers. This transition is referred to in technical analysis as a role reversal and is considered a very strong signal. In this context, if the price pulls back to this zone and receives strong buying interest, it will establish significant confidence for the start of a new bullish wave. Another noteworthy aspect of this scenario is that the breakout and the subsequent retest structure often serve as a complementary part of technical formations. For example, when the neckline of an inverse head and shoulders pattern, a descending triangle, or a falling channel is broken, it's natural for the price to return to the broken structure. If the price holds at this point, the target levels of the formation come more clearly into focus. Therefore, the expected retest following the trend breakout we are currently observing is extremely valuable, not only from a technical standpoint, but also in terms of investor psychology and market structure. If the price successfully completes this retest, that is, it holds above the downtrend line without falling back below it and begins to move upward again, it will demonstrate the market's determination to continue the upward trend. But we can't make decisions based on trend lines alone. Let's take a look at other metrics too. Stay tuned. When we closely examine the chart, it is clear that the market has reached a significant phase within the Elliott wave theory framework. It appears that the second corrective wave has been completed, which strongly indicates that a new impulsive wave, namely the third wave, is about to begin. Within Elliott waves, the third wave is typically the phase where the market experiences one of its most aggressive and powerful upward moves. Therefore, this could be a highly critical and promising period for investors. The completion of the second wave and the price action now appearing to shift into the upward third wave suggests that investor confidence is returning, selling pressure is diminishing, and the market is preparing for a more stable uptrend. This is because the second wave is often a corrective phase that can create temporary uncertainty in the market. However, once this correction ends and the third wave begins, it signals that a new direction has been established and that buyers are stepping in more assertively. According to Elliott wave theory, the third wave is usually longer and more voluminous than the first wave. It is often the strongest and most decisive phase of the trend, as the market has now moved past the uncertainty of the first wave and the indecision of the second wave. During the third wave, investors have a clear sense of direction, and the market generally enters a rally mode. In this scenario, the price is expected to reach at least the 1618 Fibonacci level. In some cases, if momentum remains strong, this upward move can extend to the 272 level. These kinds of targets serve as guidance for investors, not only technically, but also psychologically. When examining the current price movement, the upward push following the second wave may signal the beginning of a new trend. If the third wave is underway, this move is likely to be much more voluminous, decisive, and rapid. This also implies that the market is gaining support not only from technical factors, but also from fundamental data. Because third waves are not merely about chart formations, they are often backed by strong news flow, positive sentiment, and improved market expectations. The current technical structure, when combined with the previous wave pattern and present momentum, supports the idea that the price may be starting to move toward the 1,618 level. This level is considered the most common target zone for the third wave based on Fibonacci measurements. However, once this level is reached, a pause in the market is to be expected. Yet, this pause should not be seen as an end, but rather as a healthy breather. Typically, after a correction from the 1,618 level, a new rally can follow, extending the move toward the 2,272 level. In summary, the technical structure currently observed on the charts indicates that the second wave has ended and the price has transitioned into the third wave, the most impactful and potentially longest wave. This phase is one of the most closely watched in technical analysis and often the most profitable for investors. This is because it is typically the period when the market gains the most momentum, investor interest peaks, and the upward movement spreads most broadly. Therefore, the current price action may not only represent a short-term rise, but also mark the beginning of a significant trend in the larger picture. However, it is important to note that during the third wave, interim corrections may occur. These corrections are natural pauses that happen during the price's rise and do not mean that the trend has ended. On the contrary, such corrections are necessary for the third wave to progress in a healthy manner. Looking closely at the chart, it is clear that a very positive technical signal has been generated by the break of the long-standing falling structure on the RSI indicator. This resistance line on the RSI has been a barrier in the past, where price action has taken important turns and the balance of buyers and sellers has been clearly tested. This resistance line represented a critical level that the RSI has repeatedly touched but struggled to break through. This time, however, it was a different story, and the RSI was able to break this resistance level to the upside. Such breakouts on the RSI are among the important signals that precede price action and often predict trend reversals. In other words, when the RSI breaks through such a barrier, it indicates that the momentum in the market is starting to strengthen to the upside and buyers are becoming more active. This, in turn, significantly increases the likelihood of a recent upward move on the price chart. When a leading oscillator such as the RSI breaks through resistance, market participants are forewarned of a possible bullish scenario. And immediately after the breakout, increased volume and buying pressure begin to be reflected in the price action. RSI rises. The price rises. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.